here. So I'd just like to say thanks so much for everybody being here today. And love these Saturday events. So kind of want to make it as interactive as possible. So, bring your trades on in and, let's talk some trades and look at various different trade setups. But what we're going to cover today and kind of go through and focus on is kind of my, what I call my 14, or not 14, but 13-step formula for, finding better trades, for locating the really good specific trades where you can get in and out pretty fast. And so we're going to go through the kind of the tools, the patterns, some of the option strategies that I use and it tend to work really well. So again, I appreciate everybody being here. So first off, a little background on myself. I've been actively trading now for well over 30 years. Trading options now for 30. So started my career back on the oil trading side back in the mid 80s with a company called Coastal Corporation out of Houston, Texas. And it was a great experience because, they were taking in people at that time, and they would, if you got in the program, they were, basically teaching you how to trade crude oil products, all the different energy type of derivatives. So, got my foot in the door there, which I was super excited about. And then, the first thing they did, which was really great, they sent me down to one of the refineries they had in Corpus, Texas. And so spent about 2 or 3 months there, just kind of learning the process of crude. They had a big refinery there, so they bring in most all the crude came in from, tankers offshore. So it was really cool to see the tankers come in, put the crude out into the distribution, all the different distillation units, and process that crude, learn more about that, making the products of gasoline, kerosene, fuel oil, just really good foundation. Then finally ended up in the shipping department and spent, a good amount of time there, chartering ships and learning all about the scheduling and things like that, operations, which was really fundamental as well. And then finally got on the cargo trading desk. They pretty much sent me out to Singapore, not too long after I got on the desk, and spent about 2 years out there trading crude products and different Asian crude. So it was really a fantastic experience out there. So really learned a lot in the Asian markets. And then got my big opportunity back in about the mid 80s. A company called Trans World Oil hired me for a trading position. Actually, it started out in Houston. And at that time, they were the largest oil trading company in the world. It was Trans World, Fibro, and Mark Rich. So very exciting opportunity there, and spent about not very long in Houston with Trans World, and then they sent me out one summer, just kind of a vacation relief for the guy that was running the trading group out in Bermuda, which was the corporate office. And ended up they liked me well enough, they asked me to stay. So that was an easy choice, man, if you've ever been to Bermuda. So stayed there for about 16 years and ended up running the international trading group for 10. And that's where we, started trading options back in like 1987. So we were trading options on a, really large scale, primarily, crude oil options, cargoes of crude, Brent, North Sea, things like that. So that's where I cut my teeth on the option side and just learned so much, just about the trading business in general. So a little background there just to share with you, and now let's get started. So the following presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. Now, when you're trading, the reality is that as an individual trader, like everybody here, we have to do a lot, and we have to do it all alone. So, as you know, one of the most time-consuming and expensive tasks is actually finding really good high probability trades. Now, over the years, over my years of experience in trading, I gradually combined what I've learned from when my employer paid for everything, which was great. They paid for, all the research, all the secretarial, everything was paid for, which is a great deal, right? But on our own, I eventually had to develop my own research process and resources to use for that. I developed my own proprietary technical trading indicators and system that I currently use. I've been using the same pretty much ever since 2010, and then developed a strategic option guide for selecting then which option strategy to use, when, and how for the best results. So put this all together, into kind of a process. So it evolved into a process that helps really define better trades and then the best option strategies to use based on the current market environment that we're currently trading in. So as you know, the market environments are changing all the time, and there's always that uncertainty. Now, what I did recognize based on my 4 decades, trading journey is that my most profitable trades, all pretty much had the same underlying characteristics. So what I did is, and I highly recommend doing the same for, your trades, is to look back at your winning trades and even your losing trades and define what's making them work. What's the winning trade characteristics that makes them work, and then develop put together a repeatable trade selection process to help identify and then find these trades setups based on kind of 13 steps. So we're going to step through that. We'll look at a lot of trades, and if there are any specific trades anybody wants to look at, please throw them out. So let's take a look. So first off, though, I thought we'd do kind of a market review for everybody. Now, one thing I like to really home in on and zoom in or focus on is sector rotation. So I like to look at, I've got a couple different things that I use, but this is kind of one thing that I like to use. Is what's called sector tracker, and you can see the different rotation of the different sectors of the S&P where the money's flowing. So, for example, this is just a quick summary overview. You can see here for the last 5 days, where's the money flow been going for, the S&P 500, breaking it down by the different sectors. So, communication service, discretionary, things like that. And then I like to look back, also looking for a trend, look back at the last 6 months and then look at year to date. So to kind of look at what's trending in the different sectors. And then when I see something that's really interesting, it's maybe the energy sector or maybe consumer discretionary, maybe technology, then I can zoom into those specific sectors and see what specific stocks are moving. And those areas are where I get a lot of my trade ideas. And then I, put those into my scanner, looking for different volatility squeeze, different patterns. And then I, am able to find some very selected trades based on certain trading patterns and things like that, which we'll kind of review here shortly. Now, the next thing that I'm always going to be conscious of and be kind of focused on and aware and use this as well into my trading process is seasonality. So I'd like to have, alignment with seasonality. So it's going to help your trades if you get that. Now, we're not going to have seasonality trends that are always going to be consistent, but I'm always going to being aware of what's the current trend if there is one. So here's a current kind of a update on where we are seasonally. Okay, so these are seasonality continuation charts that I use, and this is like 5 years. You can see in the red, 15 in the black, and going back all the way to 28 years. Now, this is the S&P 500 E-mini. Okay, so we are currently right about here, a seasonal low around the 18th. Today's the 21st, so we're about right here. So you can see seasonally, we do get a nice kind of seasonal trend up into July. And then we tend to get a kind of a seasonal high around the mid part of July. So we get this seasonal low right about the 18th, and then we have another major one at the end of June. So be aware of this next week. We're going to potentially, this next week is the end of June. So this would be where we have a seasonal nice uptick into the market. So, take a note of that. Now, there's a lot going on currently, with all the uncertainty with tariffs, but more so with the Iran and the Israeli situation, with Trump kind of putting an ultimatum down that he'll decide by around the 3rd of July. So that, could let the market drive up, but I think we're going to be somewhat capped, but that's the seasonal look currently for the S&P. And then the NASDAQ 100 is very similar. Hold on a second here. And then the NASDAQ 100, let's take a look at that. That's very similar and even actually a stronger pattern. So I get my drawing tool here. So currently, one second. Well, what happened to my drawing tool? Here we go. Well, one net coming. Hold on. There we go, finally. So anyway, the NASDAQ is even more defined. So we get the same kind of tendency around the 18th, which is, this past week, but then we get the really bigger move right there towards the end of June. You can see very, 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 very strong seasonal trend up into that kind of the 19th. So, barring what's happening currently in the Middle East with Iran, Iraq, I keep saying Iraq because we've always had that situation, but Iran and Israel, if you take that out of the equation, we would have a nice seasonal push to the upside on the NASDAQ and the S&P, but more so on the NASDAQ. And then when we look at the crude seasonality, we also get a seasonal trend typically into the July 4th weekend. So you can see here that seasonal trend is also right here on crude. So from the 20th, 24th, right there to the end of June. So this could be a big factor. Now we do, also have a bid on crude energy anyway because of the current situation with Israel and Iran. So I like to point this seasonality out, so I'll be looking at that. So we'll be looking at some crude maybe setups next week. We'll see where that goes. We did do a trade earlier this week, which I'll show you, which was Oxy, which I thought would do a lot better, but it did okay. So we'll go through that trade. So we're going to go through and look at a lot of the different variations of trades and setups that we've done currently. So that's kind of a look there. Now, the next thing that I like to do is what I call top-down market analysis. And what this does, it really helps you to look at the big macro view of the market. Then I break it down to long-term, medium-term, then all the way down. So, when I was running the trading group, we didn't have the great technicals that we have here. So what we would do, we'd had different offices all over the world, and we would coordinate what would be the supply demand situation. So in Asia or in Europe, and then we'd look together, we'd have different metrics that we'd put together, and we'd look to see, well, okay, here's the big macro picture right now. And then we'd break that down. So are we in a good macro trend up, macro trend down? And then we could define what we wanted to trade within either a defined trend to the upside or downside. So I like to do this, I do this, at least once or twice a week just to kind of get clarity to overall trading and to where I'm seeing things. So first off, if we look here at the macro, so I'll use the S&P 500 SPX, and this is a monthly time frame. So I call this the big macro picture. All right, so when it's like you're flying an airplane 30, 40,000 feet, above on an altitude, you can really see everything very, very clear. Now, currently what I like to do is, are we trending to the upside or downside? And I can define trend by certain specific key moving averages. And so I define trend by moving averages, are we above or below? And then I also quantify the strength of the trend based on momentum. Okay, so I have two different momentum based indicators that measure strength or weakness in a market. And one is what I call Power Cycle Lore Study 1. So this is a very sensitive momentum measurement. And then 2 is a confirming momentum measurement. Now, you see here on the monthly macro time frame, the trend is currently up. You can see the different moving averages, trending up. Price is still above. This is current right where we are right here. So the big macro trend is still intact to the upside, but neutral on momentum. Momentum now on cycle 1 is negative, 2 is positive. So this doesn't happen very often. You can see the last time we had a negative momentum on cycle 1 was back here in 2022 when we had that pull to the downside, and then we had cycle 2 go negative. Now 2 is still positive, so we're still on a neutral momentum, pattern to the upside, but the trend is still intact. And so you can see from the macro big picture, the key kind of big trend area of support is this 5,400 right there. That's the 20 period or 21 period exponential moving average, which I like to track for trend. And then some of the other key ones we'll look at here in a minute. So that's a look there at the macro big picture. And then you're gonna, zoom in, lower the altitude a little bit. So we're gonna fly down a little bit closer, and we're gonna head on down to the weekly, which is what I refer to as the long-term trend. And you can see here, we are currently still up. Now, I really like to track trend, using either the 21 or the 50, those combinations. So this solid green is the 50 simple moving average, and you can see we're back above that. So the trend here is up. We're above the 50, we're above this 21, we're above all the different key moving averages below. So on the long-term time frame, the trend is up and momentum is actually positive. All right, so we have that going in for the favor of the market from the long term. Now, when we break it down to more current, the medium term, the daily time frame, the picture starts to really shift and we start seeing a different story. So what we're seeing here currently is a really kind of a sideways market action. You can see here we had these prior major highs up here, about 6,100, 62 up here. So now what's currently happened, we've got up here and we've cleared all these key moving averages. Now remember, this is the daily time frame right here, and I refer to this as the medium term trend. Now we're above all moving averages, okay, so we've got a nice cluster of good support down here at about that 57.50 in this area here. So really good cluster of support with the 200-day, the 150, the 21, the 50. So super support, but we are starting to make lower highs. So if we look at the market, you're going to start seeing the market, the highs are getting lower and we're starting to lose momentum. So we've got momentum now is negative. Cycle 1 and 2 have gone negative. And so this is what can tend to lead to market stalling out and you get maybe more of a correction. So the other thing that, with our indicators, you can see these purple magenta arrows, we're getting a cluster of those. Those are cycle reversal signals. So when I start getting a cluster of 3 or more of those, that's a pretty good indication that the market is starting to fade as far as, we're starting to get buyers starting to fade and stall out and getting a little bit of a buying exhaustion. So you can think of it also as the market taking a little bit risk off because of the current things that are going on. So what seems to be happening here is that we are getting the market's waiting, right? Playing a waiting game here. So, one thing that we did just yesterday as far as, the alert service I run is we did do a bear call credit spread on the S&P 500 SPX because I think there's a good tendency we'll be capped to a certain extent here, waiting to see then what happens. What is Trump? What is he, what's going to be his next plan of action, when he gets down to that kind of ultimatum time. And more than likely, he's going to wait to really search out all the different information he can bring in to make a decision on whether he wants to, participate or not participate. So I think it'll go probably all the way to that line in the sand date of around the 3rd of July. So that being said, I think that we have a good potential here, high probability for the markets just to be contained, okay? So we have, the markets, players have been buying dip, AI is strong, but I think we have that potential to be just contained in here, and you can see momentum and the reversal indicators have been kind of indicating that. So that's one way to play it, credit spreads, to kind of play that time decay kind of a game. So that's kind of a quick overview there. And let's see if there are any questions regarding that. Yeah, the sector tracker, yeah, let me show you. Here's a really great resource. Hold on, let me pull that up for you. Let me find it here. Okay, let me give you the link. 1 second here. So this is a free resource. It's really great, and I've been using this for years. But what it's great to help you with is here. Let me put the link in. Then you can really zoom in and break down and look for different trades, what's moving within these sectors. So there's the link. So for example, if we want to look at the energy, this is for Friday. If we want to look at energy, it had a pretty big move up. I can just click here on energy, and then it'll pull up, all the different stocks that make up that sector, and then you can sort and things like that. So you can do by, index weight here. So we can see ExxonMobil being the biggest weight, and you can see ExxonMobil was up 1.33%. So you can see what's going on there, and then you can see what else has been moving. So we did, Oxy was in here. We had that trade set up. So that's a really good way to, where I can find the specific trades and things like that. So that's Sector Tracker. And so, highly recommend it. Check it out. All right, so that's kind of a review there. Now, then the next thing is selecting the best swing trade setups. And so what I constantly look at are a number of different things, but where are we within the market cycle? So are we kind of a neutral cycle? Are we down? Are we up? So currently I'd kind of quantified that we are sideways. All right, so we're not extended anymore, but we're sideways. The market's kind of in that holding pattern where, it could go, once that uncertainty of, what are we going to do with Iran is out of the way, then the markets are either going to go down or go up. All right, so that's pretty much a good probability. But right now we're in that holding pattern, just hovering. Now, the next thing I always want to do, okay, quantify what are the market conditions we're currently in. There's always going to be uncertainty. There's always something that the markets are concerned with. Are we, at extreme uncertainty, high or low? Right now we're high uncertainty. Now, we could easily go to extreme though if something, we're down the road. I don't want to say it, but we've got this tense situation in the Middle East, which could, throw things into the extreme market conditions, and then you can qualify or quantify what type of, trades to be looking for, how to trade it, what options, strategies to use. And then the next thing I always like to look at, what is the relative strength of whatever you're trading? It could be an ETF or it could be a stock. And for, gauging relative strength, this is where I use, momentum indicators, and I also look at the relative strength related to or versus other things within that kind of a specific stock sector. So we can look at the different relative strength spreads and things like that. So a lot of ways that we can, judge strength of a specific stock or ETF. All right, so that's one thing that's very important to look at. Now, the next thing I use to really qualify a trade as being a really high probability successful winning trade is 5 different chart patterns. Okay, so I've brought, over the years of trading, I've kind of put together and defined specific chart patterns that I like to look for. And then that tells me kind of either, a breakout is coming or, breakdown based on these patterns. So we'll go through those. And then the next thing you want to do is, what is your time horizon for that trade? What do you think the duration of the trade is? Do you want to be, if we're really extreme market conditions, we want to really shorten the rope, on the time frame or the duration of our trades, because time equals risk. So right now, where are we within a duration? Should we be in a trade 1 or 2 days, 2 or 3 weeks, et cetera? So you want to qualify that for your trading. All right, so these are just kind of steps to go through, and they could be different for each and every person out here, but these are things to be aware of. Now, before we get going, I know it's summertime, you might want to take off early, but I do have an alert service that I currently run, and it's been a fantastic way for you to get great trades and selective trades. So if you're interested in this, I'm doing a 20% off on my alert service today. So this is a rare thing where I come out and do 20% off. So if you're interested in this, let me show you what you can get. So put in powercycletrading.com/special. Let me put that link in for you. Then you're going to click on that. Let me get that link for you. Then you're going to click on that. And if you want the 20% off, then put in alert right here, ALERT 20, put that in small cap, and you'll get 20% off. Now, I'll show you, kind of a summary of our results. So, everybody's here, you're going to want to pay for that service as fast as you can. So I kind of did a quick breakdown here today before I came in, just looking at the past like 15 trades. And you're going to see, how well the service has been doing. We'll go through all, a little bit more detail on that. So click on that link there. That'll pull up a drop down for your payment, and then pull that together. Let me pull that up. Hold on a second. I've got another thing I'll pull up there, and we'll review this a little bit more later. But I wanted to kind of go through this in case you have to take off early. So pull this up. So this is what you're going to get when you put in powercycletrading/special. It's going to pull up this payment link for you. So it's my lead open and close trade and alert service here. Now we'll go through this in more detail, but you can see I started my first alert part of the service back in May of 2018. And then I've got 5 different types of trading alerts that I will send out. And so these are all kind of geared or based on where's the current market that we're trading. But there are 5 different types of alerts that I will send out. And so for this special, you're going to get for the next 6 months, you can stop and start whenever you want if you have to go on vacation or business, whatever. So get my alerts, 5 different type of alerts that I send out, whatever I'm sending out for the next 6 months. Plus you get access to my trading club for the next 6 months, which will go through which, all the deep benefits you get there. So I've got a trading room, all kinds of different things that are, going to help you to in your trading. So, but just kind of a quick summary, unaudited since through yesterday, we've had 884 trades that we've closed out, within the service, the different types of trades sent out. We've had over this time frame, we've had 635 trades, winning trades, 62 break even, 187 losing trades. So we've been running around 79 up to 80% winning alert trades. Okay, again, these are unaudited, but just kind of a summary of how this has been performing. All right, so I'm really proud of it. I spent a lot of time trying to find these trade setups, and if you think about it, if you break this down, this is about $3.06 per day if you amortize it that way. But so what you're going to get, a quick summary, is you're going to get, could send out a calendar or a calendar diagonal. We do a lot of these trades. We'll go through a bunch that we've been doing lately. It could be a butterfly or a long condor. We do lots of those. It could be a breakout type trade, which could be a reversal debit spread, or it could be a credit spread, which we did just like I told you earlier, which we'll go through. Or it could be a monthly penning trade where we'll use butterflies or calendars for that. Or when we're in earnings season, we do very selective earning trades. Okay, so these are the 5 different types of alerts that you may get. You may decide you don't want to take it, or you may decide to take them all. So it gives you a really good choice of different trades based on the market condition. So, you're going to get access to all of those for the next 6 months. So again, put in that link here, powercycletrading.com, and then put in alert 20. Let me write that out, alert 20, small cap, and you'll get the 20% off. Now, you can also get my trading indicators. You can add those to this as well. So you can have all the different indicators that I use for selecting my trades if you'd like that as well. So that's a, kind of an upsell for you if you'd like that. So you're going to get, when I send out a trade, a lot of my members, again, I just want to quantify this or just kind of give you more detail. So I've got a lot of members that just do their own thing. They just want my trades. They don't really care about what I tell you or how to trade it. They just want my trades. So if I go long, it could be Apple or it could be Palantir or whatever, or short, they just want the trade and then they'll do their own thing. But when I send out a trade, I always will give you a suggested option trade based on what I think is a really good low risk option strategy for the market that we're currently trading. Okay, so these are, always look at risk first. I'm always very risk sensitive, looking for the lowest type of risk trade setup. I'll give you the entry level. I'll give you, profit take levels. I give you usually 2 to 3 profit areas that we're looking for. And then I also look at what I call price target mapping, which I just did a course a week ago on that. And that's where we use Fibonacci, all kinds of different things to map out where the profit targets could be, or even our defense targets. Now, once I send out a trade, then I'm constantly updating the trade with, it could be adjustments for different, making the trade even better based on making it better from lowering the capital that's at risk, or improving the theta, improving that, giving us more positive theta, different adjustments we can do. And then also constantly updating if we need to do an adjustment for, for some type of defense. Okay, so a lot of stuff you're going to get with me from my guidelines that I send out. So I'll give you stop loss level guidelines. I'm constantly, again, like I said, updating these things throughout the day. So you're not going to be blindsided with something coming up. So you don't have to be geared and glued to your screen all day. I'm doing it for you. Now then, these trades are listed in archive. You can go back and look at it. And then, I do an after the close video review every night of the trades. I look at all the technical levels, different chart patterns. So just a lot that you're going to get. That's just the alert service part. But with the alert service, you also then get membership to my trading club. And this is where you can really get a lot of kind of help on your trading. So membership to the Power Cycle Trading Club, again, you're going to get that for 6 months as well. And again, you can stop and start this service on your own whenever you want, so you're not going to lose your time. But with the trading club, what you're going to get is virtual trading room access. So every day from 9:30 to 10:30 Eastern, I have the trading room open. Come in, ask about any trades that you're doing. You might need help on, see what we're doing, and just ask questions because, like I said, I've been doing this for over 40 years. So there's pretty much I can help you with on pretty much any kind of trade. I've pretty much seen it all. Now, so that's something of great access. Then I do a daily video newsletter after the close, kind of review of the markets, what we're seeing, what's coming up. And then we have members video archives, so a lot of trading educational stuff that's free for you as well. And then we do a weekly Q&A session, which is live and recorded, an educational vault. And then the other big thing is once you're a member, you're going to get 60% discounts off of anything on my website. It could be any of my software or any of the trading courses. So it's a huge amount of great stuff that you're going to get here. And so if you do this, sign up here today, this thing is just driving me crazy here. You're going to get that off. You're going to get that 20% off. Okay. So rather than being $690, you're going to get everything for $552. So just come down here, and there's also TwoPay if you want it. Click on this. Okay, I'm going to go through this real quick and then we'll continue on. And then if you want my indicators, this is a 5 study set indicator available for TradeStation, NinjaTrader, Thinkorswim, eSignal. You can add that. So $195 if you want to do that. But put in the promo code ALERT20. And this is a great deal. I only do this about 3 times a year, open this up for this big of a discount. And so put in ALERT20, apply, and then you'll see 552. And again, if you do want TwoPay, that is available. And then PayPal has a lot of other payment process available, kind of selections you can do if you want to use PayPal. So that's kind of a look there. Now, let's go back here, make sure you saw everything. So that's a quick summary there, okay? Now, along with this is, like I said earlier, you can get anything on my website at a discount of 60% off. So, when you have time, just go to my website, powercycletrading.com, and you'll be a member for the next 6 months. So you can come in here, or if there's any my trading software that you want, you'll have access to that, my breakout scanner. You can see all the details. Now, if you want any of these things on my website, you just, click add to the cart. Now, once you're a member, you're going to get your members discount code. You just put it in there and it'll knock 60% off the price that you're going to see on the website. So here's all my different indicators. Now you can get my custom indicators, as an upsell today if you want for $195 by, just adding to the cart right down here. If you want that, I'd highly recommend taking advantage of this. So if you do want my indicators, you're going to get access to those. Just add to cart and then put in your promo code, and you'll get everything here at 20% off. So great deal to get all my indicators, get the alert service, get the trading club, etc. Okay, so that's what you can do there. And then also I've got a lot of different courses. All my courses are pretty much kind of geared to options. So you can come down here, trading courses. Just go in here and you can just see all the different courses that I have. Synthetic option courses, how to use synthetic options, breakouts using futures trading, technical indicators that we use, of course, there, selling options for income, credit spreads, counter diagonals, my earnings option trade strategies, butterfly strategies, how we do the pinning trades, Fibonacci course, which we just completed, my directional course. So just a lot of stuff that you're going to have access to as a member and getting that discount. All right, so just make sure that hopefully you'll take advantage of that, and I think you'll be really happy with it. Now, one thing I did, I put it together just kind of real quick here, just before we came in. just to show you, the member, if you want this alert service, you're going to get this, right now. If you put the promo code, it'll be $552. So, you're going to be able to pay this thing off. This is just unaudited, but this is a quick summary. I just ran through like the last kind of 15 trades that we had. And if I can get this working again. One second here. Here we go. Okay, so what I went to, if you do the today, you're going to get the alert service for the next 6 months for $552. I think this roughly works out to a little over $3.06 or something per day, if you want to look at it that way. But we've had, this is pretty close over the last 15 trades. We're currently still in this trade. We'll go through a few of these here in a minute. But Dell is currently up. We had a profit take, if you wanted to, on Friday, $122. We had the Oxy trade, $165. We had a Russell short trade, $358. We had an Amazon trade that broke even. We had a Palantir trade up $128. A Target trade lost $45. The losers are very, very small when we do have losers because of the option different strategies. We had an IBM trade up $155, an SPY short up $255. A Walmart trade up 35, Palo Alto up 35, Walmart lost 45, 40 on GDX, the Russell up 350, Schlumberger, SPX. So this was, again, these are just kind of a quick summary, but this is 15 trades. Out of these 15 trades, we had 13 of those 15 were either winners or break even. So, that's a really high, we've had a just super high winning percentage lately. That's over 85%. So the point is, this adds up to about around $1,600 if you did just one contract, okay? One option contract, that's all, one option contract. This cumulative is up, about $1,600. So just think, if you just cut that in half and you only made 800, or let's say you only made 500, so you're going to cover the cost of this alert service within a very short period of time. If you just look at these trades here, 122, 165 right here, you pretty much covered the cost of your alert service here pretty fast. So, my whole concept when I send these trades out, I'm looking to, for singles and doubles, and then we're gonna, occasionally we're gonna get that big home run. So you can see we had a Russell trade, I'll show you this in a bit, where we had a really nice short trade that really, really blew out. We had over $300 there. We had another SPY trade. So, and then we're just chipping away 122, 165, 155, 35, 35. Some of these we get in out of really quick because the market changes, things like that. So just keep that in mind and think about it. You're going to be able to pay off the alert service really fast. And, I'm really, like I said, I've spent a lot of time trying to find very selective trades for you that are very low risk. All right, so just want to point all that out. And again, here it is, Charlie. Just put in that link, powercycletrading.com/special, and then use that promo code. Make sure it's small cap, alert 20, and you'll get everything here, 20% off. You'll get the alerts, all the 5 different selective alerts, plus a trading club for the next 6 months. All right, so then let's go through steps 1 through 5. So this is going to be how to identify cycles and market conditions. And then what we want to do with that, once we do, that'll help us validate a stock's relative strength based on the time horizon we're looking to trade it with. So, looking at that, again, I go through kind of an analysis or where are we in the market? So currently, my analysis that we're kind of a sideways kind of market right now. All right, now the next thing I use 4 very primary moving averages that I use to help to identify and track trend and to identify areas of major support resistance. So just did last weekend a Fibonacci price target mapping course that combines a lot of this with it to what we call map out targets. But the key moving averages that I like to use will be the 8 exponential, the 21 exponential, and the 50 simple, and the 200. So these are the four that I'm always going to be very, very concentrated on looking for within the market. Now, I like to look at other moving averages as well, but these are the specific ones that I'm really looking for to help define trends and trades. All right, so let's go through how to incorporate those. We'll look at those next. Now, the next thing I do is kind of quantify degrees of market uncertainty. And so, are we high or are we extreme? So, we are, let's hopefully we're not going there, but we are on the edge of maybe things getting pretty dicey. So that would throw us into an extreme market condition, and that's where we then would shift and really change the trading strategies, the option strategies that we're going to use. So that's going to tell us a lot. Now, currently we're kind of in a high amount of uncertainty. We've got the tariff situation going on, kind of the trade war, and then we've got the potential here kind of creeping up on us. All right, so we're kind of high uncertainty, and we're kind of in a sideways mode of the market, kind of wait and see, a pause, where we're also losing momentum, and the market's starting to stall out a bit, which could shift the market more into a downside kind of correction mode. But we do have seasonality, which is another thing that could neutralize that negative momentum if we can just get that uncertainty of the Iran situation out of the way. Now, the trading, when we look at market momentum, in any type of market, it's all about price direction, timing, and then managing your risk. So if you go back and you break down all your winning trades and then look and break down your losing trades, primarily you're going to see that the mistakes that come that sabotage your trade is that you get the direction wrong, or two, you get your timing wrong. You get in too early or you get in too late. These are the two major things that will either make your trades a winner or make your trades a loser, okay? And the next thing is good trade management, and that comes in my opinion, using really good risk-defined option trades. It's what I like to specialize in using for our alert trades. And so then the next thing is really to use momentum flows to help us quantify strength or weakness. So that's where I use my momentum indicators, and this measures price strength or weakness. And when we're measuring this weakness or strength across multiple time frames, it really creates a dynamic trend following indicator that helps me to identify new price cycle trends changes earlier, and then we'll validate the trend strength or weakness based on how much momentum it has behind it, the different time frames of momentum. And then once you can look at that, if you've got really solid momentum and you're confident about it, it's going to help you stay in the trade longer to maximize your profits. So very, very important. All right, so let's take a look. I thought I'd show you some of the different chart patterns that I like to use. And this is also what goes into my alert trades that I send out, these specific chart patterns I'm constantly looking for. Now within these, there are 4 different types of patterns that I like to look for. And one is what I call the cycle high reversal, cycle low reversal, and then a cycle low retracement reversal and a cycle high retracement. Now within these 4 patterns, the one that I really love to look for is then a volatility squeeze, compression squeeze breakout pattern. Now this could be in any of these other 4 patterns. Now, so when I see, maybe we see a cycle low reversal coming up and it has a squeeze in it, then I'm going to focus in on that, kind of a laser focus. All right, so these are the kind of the 5 patterns that I look for helping me to keep and maintain a really high winning probability of trades. Okay, so yeah, so if your question about understanding the trades, the alerts, good question. So what I want you to do, let me see, I'm reading your question. It's when you go through we'll go through a bunch of the alerts today, but what I want you to do is just go back and look at past alerts and break those down. So I try to make it, when I send out alerts, we'll go through these here in a minute. I try to make it really detailed and very, very clear as to what I'm doing. So we'll go through a bunch, and hopefully it'll clarify to you, how to read the alerts. Because when I send out a trade, all it is what Thinkorswim would be putting into the order. It's the order of based on Thinkorswim. So it's not something I'm, kind of making up. It's the actual trade order that would be coming out of Thinkorswim, which is the platform I constantly or mainly use. But we'll go through a bunch here, and hopefully it'll make it a bit, better, more clarity to you. All right. So the first pattern that I look for is this volatility compression squeeze kind of pattern setup. And so this is identified as a period of price consolidation where price is coiling really tight, really tight coil where it's just consolidating sideways in that kind of pattern. And then at some point, though, it's not going to stay coiled. It's going to either break up or break down out of that pattern. And these can be very explosive and fast moving, kind of trades. And that's great because, the shorter the time frame, the less risk. Remember, time equals risk. So if we get a compression, these things typically will be in and out of these trades really quick because they're very explosive. Now, when I look to my lower time frames and I have multiple time frames that might also have a volatility squeeze, then these can become very, very powerful. And it's kind of like a chain reaction explosion. It's kind of like lightning in a bottle, man. You just want to bottle it up and look for that kind of trade pattern each and every time. So we can define this with our indicators exactly what it is, and that's kind of what I look for, I scan for. And a lot of the trades that I do and I send out will have a volatility squeeze compression component to the trade, which we'll go through a bunch and I'll show you. Now, once this reaction sets off, this time frame, you might have multiple time frames in a squeeze, and it just kind of creates a kind of a tsunami almost. You have that 5 minute that triggers, and then you have the 10, 15, 30 daily, whatever, and you can get a really kind of big trend going. So these volatility squeeze can really ignite the next time frame up and create great situations for swing trades or day trades, or even a longer term trends can develop. So this is what gives you the big timing edge. So this is what can really make your trading turn around. But again, these are the things that go into, when I pick out alerts that I'm going to send out or trade alerts, these are the things that I'm looking at to incorporate in the trades that I'm looking for to send out. So here's just a really good example on Netflix of multiple squeezes. So you can see here, you can see how tight the pattern was here. And then see my indicators will mark these color coded. When a squeeze pops up, you'll have these dots like here. It's kind of hard to see, but you can see these magenta and green dots. So those are showing that the market has entered into a squeeze based on the code that I put into the indicators. So here we have a squeeze here, right there. You can see it, then it breaks the top of this pattern where it was tight. You would see it cycling, and we had a big breakout. All right, so you can see my momentum indicators are signaling, giving me the potential indication as to direction. And so the momentum is shifted up, so the probability is it's going to break to the upside. Here's another squeeze on Netflix. Momentum is up, probability to break to the upside. Here's another squeeze. Momentum is up, probabilities to break to the upside. Now with these types of breakout trades, then I like to look for, I'll either use maybe a debit spread. We use a lot of long condors, or it could be a calendar diagonal. All right, so these are typically the different option strategies that I might send out, for that trade. Or, if you see a trade come out that says new Netflix trade long, you may decide just to do your own thing. But I will always give you an option strategy that I think would be good for that specific trade. And we'll go through a lot of examples, but these are some of the specific ones I like to look for in this kind of situation for a squeeze, because these can be fast and powerful up and out or down. And now here's the next pattern, a cycle low reversal. This is when you've got the market has really sold off hard. You can see how extreme this was selling off. This was SPY. And you can see these extreme range bands, and you can see that's the 8 exponential moving average, and it just comes up here, fails, comes up here, fails. So failing all the way down, but look at the momentum, it's hard down on cycle 1 and 2. So as it's moving down, it tells you with my momentum indicators, I'm not looking for any long trades here. We're gonna be, if I'm gonna send out a trade, it would be a short trade setup, maybe on a failure, a retracement failure, something like this. But then here you can see it starting to turn, and we're getting momentum shifting up. My cycle reversal shifts up, momentum shifts up, and boom, get into this trade here. So this is a cycle low reversal off the daily. And here we might do a debit spread. We could do maybe a butterfly targeting a certain area. We might want to do a long condor or calendar diagonal. So these are the types of option trades that I may send out, based on that kind of trading pattern. This thing keeps popping up. All right. All right, so that's a cycle low reversal. Then we have the cycle low retracement. So what this is, a retracement is when the price retraces into a key major moving average. So here's, for example, on gold, the gold futures had retraced down here. This is a 200-day moving average, that blue line. And you can see it retraced down here, and it was just hovering around that 200-day and then broke above it. All right, so that's a retracement to the 200-day right here. You can see it retrace, and now it's in a volatility squeeze. So here you can see it over on the daily time frame. That was the weekly. See it retrace down here to that 200-day. That's a retracement reversal off that key moving average. So again, this would be maybe a great situation for a debit spread, a call debit spread, or maybe a call butterfly targeting this specific, Fibonacci level here, or we might want to do a long condor or calendar diagonal. So those are the types of trades that I may send out that would kind of complement and go with this type of a trade chart pattern set up. Now the next one is a cycle high. Yeah, if you don't use Thinkorswim, it doesn't matter. I'm just sending out. The question is, he doesn't use Thinkorswim. I'm just sending out the trade. So it's going to be very, very clear as far as how it works. I'm not sure where you're getting caught up, but I'll go through a bunch of different ones with you. Okay, so here's a cycle high reversal. So this is when we come up and the market's been cycling and above all the key moving averages, and then starts to fade, starts to lose momentum, and buying exhaustion starts to happen. So you can see here this, like for example, this was QQQ on a daily. It was having a really nice trend up, and then we start getting, the market starts to, we get a cycle reversal here, momentum starts to shift down, and the market starts, retracing back down. So it comes down here, breaks that 21, comes to the 50, and then, breaks down even harder. So with this type of trade, a lot of times, call credit spread might be the first one that we might go to. Or we do a debit spread, a put debit spread, or a put butterfly, or put condor, or even a put calendar diagonal. So a lot of different ones we can look at. And again, it depends on where the market conditions are. A lot of other things will go into, which one of these trades, option strategies to use. So that's a look there. And then we've got the cycle high retracement reversal. This is where it comes in to a key major moving average overhead and fails. So here's a good example, for example, of XLK, the technology ETF, came into this 200-day moving average right here. So huge, 200-day is a big, huge moving average, which can be support or resistance. But you can see the first time up, this thing just it has a hard time breaking through. And then we get these cycle reversal indicator clusters coming, and then momentum shifts down, and down she goes. Okay. So with this, again, we might initially set up a call credit spread up here out of the money in case it churns sideways and then moves down. Or if we're more selective for, more specific timing, we'll do a, put debit spread, or a butterfly, or condor, or calendar diagonal, or even a calendar. So we did a really nice calendar for downside move this week on Target, which was an alert trade, very low risk trade. I'll show you that if we have time. So just a lot of different things we can look for, with these specific patterns, and then match the option strategy with it. Or you can do your own thing, with the trade if you like, once I send it out. Now the next thing is my scanning. So, the other thing is, okay, finding the trade. So I'll look through the sector rotation, then I'll put a lot of those stocks I have in my scanner, and then I can scan looking for, a volatility squeeze or momentum, a reversal type pattern that I like to look for. And I'll set up scans for that. So here's an example of just kind of my custom watch list of all the different stocks and ETFs I'm just constantly looking at. I can put this into my scanner. I can click, scan it for the squeeze, a volatility squeeze, and it will pop out everything in a daily, or I can set it up for a 4-hour or whatever time frame. And then I'll have a list of all these different trades, stocks or ETFs that are in a squeeze. And then I'll look through these to see which one matches the pattern that I'm looking for. So for example, you can see Costco here in this example was in a squeeze for 18 days or 18 bars, and momentum was negative. TJX was in a squeeze for 18 bars or 18 days and momentum was positive. So I have that color coded. And so that's a really big place where I find, trades. So here's just, for example, I'll just show you the scanner real quick here that I use. And then you'll also have access, to this if you want to buy it off the site or whatever. So here's my custom watch list. I'll just show you how quick I can do it. Here I'm going to scan for anything in a squeeze for a daily, and so you can see what came up. Target's in a squeeze for 25 days. Pepsi squeeze for 16 days. Paramount, Autodesk. So just a huge list of things in a squeeze. And you're going to notice here everything's red. So this is color coded based on momentum. So my cycle 1 indicator, my fast indicator's negative on these, and so it's color coding it red. So you can see there's a lot of red here. So there's potential for the markets to start fading based on just when I look at that, that tells me a lot. And then what I'll do is I'll flip through and scan, a lot of the different trades quickly through that. So for example, I'll just do a quick scan for you and show you what is popping up. So, what I'll do is I like to look for, the 4 hour along with the daily. So let's take a look at a few. So I'll flip through a few of these real quick. So here's Target, and we did a short trade on Target last week doing a calendar. Okay, so here's Target. You can see here it's in a volatility squeeze. See that squeeze? See how defined that sideways pattern is? We've got our momentum, pretty much all of our indicators are pretty much pointing down. So we'll see what happens. So with this trade, this was an alert trade that we did this week. It was a very low risk trade. We did a calendar targeting 93. I'll show you that in a bit if we have time. All right, so we're just a very low risk trade targeting 93. That was a calendar that we did. Here's a look at Pepsi. Pepsi is in a squeeze. So I'll flip through these and then look based on the pattern. I might see that something that really I like, and then I can focus in. So here's Pepsi. You can see that tight squeeze there. Here's Autodesk. Autodesk looks poised maybe for a breakout to the upside, but just there's so many that we can look at. There's just endless, and this is where are going to get. Oh, this looks really good. I'm going to write this one down. This is a DuPont. This looks like it's about ready to break to the downside. I'm going to put this on my watch list for Monday. DuPont short volatility squeeze. See this? It's below all the key moving averages. I'm going to put like triple stars by this. Let's see what else we can find. So question for calendar diagonals, and isn't it a good idea to go 45 days or more out to take advantage of weekly and short-term up? Yeah, well, it depends on your time horizon. Yeah, that if you think it's a longer term trade, you think for the next 45, 60 days, this is so the question, here's the question. So this is a good question. So when you do calendar or calendar diagonals, the question is, even on a short-term trades for calendar diagonals, isn't it a good idea to go 45 days or more out for the long and take weekly, use the weeklies for the short? Yeah, so if you think there's a trade that's going to trend for an extended period of time, then I agree with you. But if you think that things are going to happen real fast, then remember, the further you go out, the more expensive the option will be, right? Because you're paying for time, all right? You're paying a big part of the price that if you go out and you buy an option 45, 60 days out, it's going to be 2 to 3 to 4 to 5 times more than if you buy an option that's going to be maybe only a week to 2 weeks or 3 weeks out, right? So it depends on your time horizon. So if you think something's going to trend for an extended period of time, then yeah, go out 45 days, go out 1 or 2 years. We did a trade setup. I just did a synthetic option course not too long ago. We did some synthetic longs where we set up, trades for Microsoft and Amazon going out in 3 years. Okay, so built those with a synthetic long and then selling, weekly options against it. So just again, depends on your time horizon. Now for DuPont here, this looks great. I'm going to look at this on Monday. We may decide to do a put calendar diagonal. That looks really good. Don't want get too offbeat here. Now here's Dell. Here's one that we just did as well. This is Dell. See this volatility squeeze? We set this one up last Thursday. We did this initially with a call calendar diagonal, and then we adjusted this. I'll show you this in a minute to a call condor, and we've got this for super low risk trade. So look at that volatility squeeze. This is trying to trigger to the upside. It's broken back above that 618 retracement. If this doesn't get caught up in any, kind of geopolitical washout, this has potential for a bigger move to the upside. So here's Dell. You can see it's pushing through that 618. Our next target is right here, 122, and then potentially up here. So we'll look at this in a minute. So that one popped up. That was one I found off the scanner. You can see it right here. Right there, Dell. Here's the squeeze. So this is just a great place that I find these trades. So those are a few, but I like the looks of DuPont. I'm going to look at that one, like I said, long and hard. All right, so that's, I want to point that out real quick. That's where I find the trades that I send out. And these are also trades that we go over in the trade room. So make sure, if you're a member or if you're an alert member, come in the trade room and see what we're, looking at potentially setting up. And then ask questions like you're doing here today, okay? Now, here's the next thing, steps 10 through 13, the setups, the option strategies used in the trade management. So this is, we're gonna go through a bunch of different trades that we've just done recently with the alert service, just to show you these are the alert trades that were sent out. Now, if you're in the trade room, a lot of times I'll go ahead and we'll start setting these up in the trade room, but sometimes we'll do it later in the day. But that's a good reason to come in the trade room, see exactly why we're doing it. Now, the goal of trading is to, have more winning trades than losing trades, since it's impossible to have all winning trades. Now, you could say, hey, you don't have to have all winning trades. You could, you could have more losing trades, but you have that one big winner. But I like to have low risk, high probability trades. So we're going to have more winning trades than losing trades. And we're going to be looking, like I said earlier, for singles and doubles, and we hit that home run because we're going to keep our risk low. All right, so with this reality in mind, the performance to the date of the trade setups, which I've been sending out through the service, have been, I think, pretty good. Let me know if you're, have other services that are doing better. Please let me know. Now, again, you might say, okay, well, I've got another service that has a higher winning percentage. But I guarantee if you break down what they're doing, they're probably only doing credit spreads, and they're just getting in and out real quick. So they're not going to have the returns that we're having with our alerts, because when you do credit spreads, those are a negative risk ratio trade. You'll never get the big return on your capital with credit spreads. You're just chipping away. All right, so here's, again, just the alert service to date. And this is, going back, with the first one I started was in 2018. And now here we are. So I've been doing this for quite a long time. And then now we've got 5 different alerts that we'll send out. So we've had 885 trades closed. Of those, 636 winners, 62 break even, 187 losers, 79% win rate. Again, these are unaudited, but kind of a summary of those trades. Question, when you put a price for the trade, what percentage over to be comfortable taking the trade? Typically have to pay a little more. Yeah, so, when I send out a trade alert, I'll say around. So, I look at it more kind of as a dollar amount. So you might want to look at, I try to get them pretty specific. So maybe 10 or 15, if I send out something, like say, buy it at $100 or something, maybe, around that. So it might be 110, something like that, $10, $15 maybe, depends on the trade setup, but try not to chase it more, because sometimes you're going to get, you might get a better fill. It might come off a little bit, so you get actually better. And then other times, you might get a little bit worse. So I wouldn't chase it too much. I'd say, the best would be $5, but 10 to 15, something like that. We'll go through some examples. Now, when I send out alert, I use a service called Telegram. So as soon as I punch enter, man, this thing goes out, it's out within seconds, okay? So here's just an example of some of the things that we were doing on Friday. So you can see here's June the 20th. This is the Oxy trade that we set up. I'll show you this here in a minute. But it says the Oxy long, it says trading around 45.65. So if you're long, the adjusted long call condor, okay, we adjusted into a call condor, and I'll show you what that was. So that was the 20 June 44 call, short the 20 June 47. So this is a call condor, long call debit spread, and then short the 20 June 48.51 call spread like this. That's what it looks like. So you're long the call debit spread, short a call credit spread. So if you're long that, I'm saying, reminding you, make sure you take profit. This trade was going to close today. It was expiration. Take profit today prior to the close. And it was currently up $123 when I sent that out. So that was a 332% return. So look at the return there. You're going to see why this is so big, because we adjusted our risk down on this trade to $37. So remember, if you're looking at just credit spreads, you're never going to get returns like these, okay? Because they're always at negative risk ratio. You're never going to get a positive risk rate, positive return. Okay, you'll get 25, 35, 40, 50%, 60%, something like that. But credit spreads, you're never going to get greater than your risk. And then here's the one that we just did on Friday. This was one that we did for counter trend short, just to kind of play in if we are going to be capped, over the next week or so. This is a way that we could play that to take advantage of theta decay and time decay. So you can see in this alert that I sent out, I said new, so that means it's a brand new trade, SPX counter trend short. So at that time when I sent it out, SPX was trading at 59.60. Okay, it's a cycle reversal, had negative momentum on cycle 1 and 2. First target looking for is 59.20, target 2, 58.65. So say know your risk taking the trade. This is a high theoretical probability trade. So the reason I say that, these credit spreads are probability trades. So the short strike was an 18 delta. That is giving you a high probability that the trade will not get to our strike price. There's 18%, only 18% theoretical probability. Now that's theoretical, right? So we sent out short 61.10, long the 61.15 at around $1.10. Now this one actually went up, so the spread was $1.20. So you could have gotten into this for $1.15 or $1.20. So this one, went up a little bit, so you're able to get into this a little bit better. All right, so then I come down, and you can see here I said that the 18 delta short strike. Then I said trade management. So here's some things to look at for your trade management. So we'll be out of the trade before the Trump-Iran deadline. That's the one thing that we'll do. That's why the trade was kind of initially set up. And then I said the stop loss will be, one stop loss way to use is a 2x your credit received. So if you, had a $110 credit and it goes against you, now it's at 220, that would be one stop loss way to manage the trade. And then the trade expires next Thursday prior to no, this is wrong, that was wrong. I changed that up, okay? So that was the key there, and that I'll say start taking profit when you get 80% of the credit received, something like that. 70, 80% is where, you start taking profit on these credit spreads. So the reason that it was done was just to get time decay in case that market just churns. So that's kind of, what you can look at there. Okay, so question is 6110, 6115. Okay, look at this. Okay, so this says it's a fair call credit spread. You're short. Okay, if you know do you understand what a credit spread is? Okay, if you don't understand what a credit spread is, then I'll teach you that. Okay, so here it says sell a vertical credit spread. All right, sell. Okay, you're selling this. So the first part of it is the short. So if it was trading, SPX was trading at 59. I can't draw. Let me try over here. So SPX was trading at 59.60 right here. Okay. Now, when you do a credit spread, you're short, okay? You're short a call, okay? This is, you just have to understand the option side, all right? So that would be, the short is 61.10, and then you're capping your risk with the long at a higher price above it. So then you're long the call above it at 61.15, okay? Okay, so it says here, sell one vertical credit spread. So you're selling 61.10, buying 61.15. Now, if it had said buy one vertical call debit spread, you'd be buying that 61.10, selling the 61.15. Buying that, you'd be buying that 61.10 at a lower price and selling the 61.15, okay? So that's what you need to understand. Understand the credit spread, debit spreads, and it'll be very clear to you. And then if you don't, come like you're doing here, come in the trade room and just ask questions, ask me. Dadgum this thing. All right, okay. Now let's go through a few other trades. So here's the calendar diagonal. So we do a lot of these, and you can see here's a summary kind of when I started doing these were back in the 2019. And then through yesterday, we've had the bulk of the different trades that I tend to send out. Most of them, majority will be calendar diagonals, and the next will be butterflies and condors. So we've had 340 trades closed out, 244 winners, 21 break even, 75 losers, running around a 78% winning rate. Again, make sure these are unaudited. These are just kind of summary of the trades. All right, so these are calendar diagonals. Here's just one that we just set up. This was on Dell, okay? So we set this one up on the 18th. So last week we set this one up on Wednesday, the day before, Thursday, the holiday, all right? And Dell was trading at 117. This was in a volatility squeeze, and that's the reason I set it up, was based on that chart pattern. And then we originally did this as a call counter diagonal, and then the reason I did that, because my next trade plan was to adjust this to a long call condor, which we then adjusted for a super great price. All right, so I'm always thinking 2 or 3 steps ahead when I plan these trades. And that's the other thing you're going to get from my alert service is my trade plan, okay? So I'm always thinking of the next step of the trade, okay? So these are things that you may not be aware of, but you're going to learn, from following my trades or being in the trade room. So a lot of my members have just learned basically following these trades. So look at this trade. This is a breakdown that we'll show you, okay? So it says new Dell long. Dell was trading at $117. It says a daily cycle low retracement reversal off the 21 and the 200 simple moving average. It had a daily and 4-hour volatility squeeze. That was the pattern I like, right? We just looked at that. So I was looking at that to potentially break out. I have then target 1, 120, target 2 to 122. Know your risk on this trade. So it says buy one diagonal. So this would be buying the June 27, selling the 20 June, okay? So you're going to be long, okay? It says buy the 27 June, right? So you're going to be long the 27 June. It doesn't say sell. So here's where you need to understand. It says buy the 27 June. I mean, I'm not spelling that out, but it says buy one diagonal Dell 27 June. All right, so very, very clear. And then you're selling the 20 June. That's the duration part of the trade. And then the price part of the trade is you're buying the 27 June, selling the 20 June, and you're buying the 27 June, you're buying the 116 call in the 27 June. That's how that works. And then selling against it the 20. And you're doing this around 310. So this was actually 310. You could have gotten in at 300. All right. So then that was the initial trade setup. And then we were looking for that squeeze to trigger, and then it started to trigger. And then on the 20th, which was Friday, now it was starting to break out. It was trading at 118.77. So then I sent out this adjustment. Okay, so this is exactly what I wanted to happen. And so we were going to adjust this trade to super great trade. So this was just beautiful trade setup. So it says if you're long the 27 June 116, okay, you're long that 116 call, short the 20 June 120 call, okay, then we're going to adjust it. So now what we're going to do is we're going to buy to close. We're closing out that short strike of the 20 June, 120 June. We're closing that out for a profit actually. And then we're selling to replace it. We're selling to open the 27 June. Now we're into the 27 June. So we're already long the 27 June 116 call. We close out for a profit that 120. That adjusts down our cost of that 116. And then we're selling to open the 27 June 119. So what do we do here? We just made it into a call debit spread. Okay, and then on top of that, I wanted to make it to Condor. So I say sell to open the 27 June 124, 127 call credit spread. So you're short the 124, 127. So right here. All right, so this turned out, we had a beautiful trade setup. So now we're long the call, short the call, short the call, long the call. And we did this, our price, we adjusted this price down to $25, I believe is our risk. That's it, 25 bucks. All right, so this is what you're going to get out of the alert service. Okay, let me know if there's other services that do these kind of trades and give them out to you. You know, I'd really like to know. All right, so that is, this trade could turn out to be a fantastic trade, or you know, the max risk we have is around 25, 30 bucks, depending on your adjustment. All right, so when I sent this out, this was then already currently up over $110 per spread because it was breaking out of that squeeze. So this was really exciting actually. Then I sent out one more alert here towards the end of the day. Dell Long now is trading at 119. Okay, so it was really breaking out. I'll show you. And then so that trade, that same trade, now was up $122 on the risk of 25, is up 488% return. I think that's pretty good, pretty exciting actually. Let me show you exactly. So we were just looking at this, and so let me show you. This is a see here. This thing had a look at this. It's got a 4-hour squeeze here, right here. See it breaking out. See that trigger? See it breaking? And here's the daily squeeze. See it breaking? And now our targets, you know, I said 120 and 122. Here it is, 120, 122. So I'm mapping, I've done all this work for you. And then all it is, you can do whatever you want, but I'm mapping it out. I've done all the explanation. I've got it set up for you. So we entered right here, volatility squeeze. I saw that pattern. My scanners gave me that. My momentum said get in it. Pulled the trigger, jump in the trade, and then we did the adjustment on the 20th. It was trading at 118.77. And then yesterday going out, this is just, you know, I said if your multiple contracts take some profit, hold the balance. Now we're into the trade. We had 122 yesterday, up 488%, you know, in 2 days. You know, that is pretty not too bad, if I may say so myself. And so here was the initial trade, and did this for exactly the specific reason I did this was to adjust this to get a little bit of money out of it from Friday, the premium. And so it was, we collect a little money if you wanted to, and then adjusted the trade. So this trade when we set up was $310. The spread now blew to 362. So, you know, it was up $52 per spread, 16% return in 1 day. But this trade was planned and set up to adjust to the Condor because we had, see the duration of the 116. Here's the key, and this is what I do, and this is what you can learn. Here's the duration of the 116 that we're long is in the 27 June, and we shorted the day before the 20, which was Friday, just to pull a little premium. So this worked out. This was a textbook trade the way it worked out. So then we adjusted this to the call Condor, and so here's what we've got. So now, you know, our duration long was in the 27 June. We were long that 116, and now, you know, we closed out the short strike 120, took some profit, adjusted down our cost of the 116, and then we sold against it the 119. All right, so now we're long this call debit spread, And then to really reduce our risk, to increase our theta, we sold the call credit spread. This was like a 20 delta short strike, the 124, 127. So now here's the call debit spread, call credit spread side. All right. And now look at this. We've got a spread width of $3, 300. Look at our cost. 20. We adjusted it to 25 bucks. Potential to make, if it goes out next week in here, we'd make $275. That's a 1,100% return. So you let me know, please let me know if you see other services that are offering trades like this with the winning percentage and these returns with the risk that low. All right, I want to know if you can tell me, please do. So here's where it went out Friday, right here. It's going out right there at about 118.94. So this at this point in time, that spread blue from 25 bucks now is 147. So up under 22 bucks, 488% return. Now that trade is what we still have on. Okay, so here's the Dell trade currently, and we'll sit with it. But the thing is, we've got a lot of crazy stuff going on, so I like to keep the risk low. And so now we've got this trade adjusted to this condor, and if we go out here between the two spreads, this will be up $275. Okay, so it went out right there. On Friday, it was up, $135 on that risk of 25. That's not a bad deal. And let me know, again, let me know of other places where you can get, trade setups like this, because I think they're pretty good. So question, how do you adjust if the trade goes right by your target and shows a debit results was a butterfly? Well, what happens, and this is what happens, what happened to a few of these trades that I showed you earlier that made 35, 40 bucks, that's what happened. That if the trade starts to blow through your short strike, we just close it out for whatever profit we have in it. Well, you'll always have a profit. So for example, when I say that, so if this, say, for example, something crazy, if you had a butterfly and it blows through your short strike, then you just have to close the trade out. You just take, the profit. It's not going to be your max profit, but you take the profit and move on to the next trade. Okay, thank you for telling me that. I was just wondering. Great, thanks for sharing that. So here's John said, let me see if I can recap this. Have several services and no, do not get the explanation, but I'm adjusting to your verbiage. Yeah, you'll get it. So thanks for sharing that. Okay, so that's a look there. That's Dell. We currently have that one on. Real excited about that. We'll keep our fingers crossed. Now here's another one that we just did. This was Oxy. Okay, so these are all trades that we just recently did. So just think about so the trade service today. If you use that link that I just gave you, powercycletrading.com/special, and you put in alert 20, and you want to pay for the alert service, I think there is a really great. You can just see from the trades I'm showing you. These are trades that have been sent out. There's a really good high winning probability chance that you'll be able to recoup your whatever it was, $522 or whatever that came out to be in a very short period of time. So if you'd done the Dell trade, you could have closed the trade out Friday if you wanted to, take all your profit for 135. That's one contract. So if you did 10 contracts, you're up $1,350. Okay, the service is $522 or whatever, boom, covered your cost. If you did one, you're up $135. If we get this thing to go where we want it to, hopefully right there, we'll be up $275. You're already then halfway to the covering your costs, and that's one contract. So if you did two contracts, you'd be there. You would cover your cost. Okay, that's what's exciting about it. All right, so that's Dell, and then here's Oxy. We just closed this one out. Now this one I thought we were going to get a bigger pop. because of the things going on, but it was contained and there was a good reason. I'll show you that in a minute. So, but here's the trade on Oxy. Let's go through the verbiage here again. So this was a long call counter diagonal starting the trade. Okay, specifically designed, designed these trades to kind of end up where they are. So this was a very low risk trade. It's trading at 43.80. So I say new Oxy long, trading at 43.80. Daily cycle low retracement reversal off 21 and 50 SMA. Positive momentum. I'm giving you the reasons for me doing the trade, because, if you're, I like to have confidence in, what I'm doing, right? So if somebody's sending me alert to do, I want to understand why are they doing the trade. So I'm trying to give you that explanation in the shortest period of time as I can, because these things have to go out fast. All right, so then I say upside momentum it has all the things I'm looking for. Then I give you target 1, target 2. If you want to do your own thing, you just do your own thing. And then I also put in a little bit extra here, said heavy monthly option activity on the 20 June series at the 45 strike. So that was another thing I was looking at, over 30,000. Okay, so here it is. It's buy one diagonal Oxy 100. All that means is that one option contract is equivalent to 100 shares. So if you did one contract, you'd multiply it times 100. So if it cost you 73 cents, that would be $73. That's all that means. That's how it comes out in Thinkorswim. So it says buy the 20 June, 13 June. So you're buying the 20 June, and then you're going to be short the 13 June, and you're going to be long here. The first part is what you're long or short. So it says buy, so you're going to be long the 44 20 June call, and then short against it the 13 June 45.5. So $1.50 wide spread at around 73 cents. Okay, and then the 13th adjusted it. So then I said if you're long, we're going to do adjustment. We actually already did adjustment, so this is just another one that we did. So we originally adjusted this, I think, into a call debit spread, and then we adjusted this into the credits. We added the credit spread to make this into a long call condor. So we ended up adding a credit spread to this, and now we adjusted it to long the 20 June 44 call, short the 20 June 47, and we added the credit spread, short the 20 June 48.51. Okay, so now we've got what we call the condor. So we do a lot of these, and that's another thing. If you're not familiar with these types of trades, join the service, learn how these are set up. I can show you in the trade room, or you buy one of the courses that I have for 60% off. It costs you about $100 or so, and you can learn everything there is to know about a call, condor, or butterfly. And then here on the 18th, that was the Wednesday before the holiday, I said Oxy long trading at 46.50. If long adjusted long call condor, the 20 June 44, 20 June 47, and short the 20 June 48.51, trade is currently up around $165 per spread. Now we adjusted our risk to this trade, you'll see in a minute, to $37. So on that risk of 37, this thing was up 445% return. Okay, and then I'll say make sure to lock in a little profit if you have multiple contracts. And then here it was going out on Friday. So it was going out at 45.86. It was, I was thinking this was going to have a bigger move, but it went out okay, up 145, 391% return. All right, that's one contract. Remember, this is one contract. So here's a trade, got into it right here. Our indicators, momentum was up, cycle 1 and 2, cycle reversal. But see, the problem with this trade, I knew this going in, that if it's going to struggle or stall, it was going to stall up here. You can see that 200-day moving average and the 150, there was a lot of resistance. So I wasn't surprised that it stalled there. I just thought there might be more momentum to break it through with the current, situation. And oil, Oxy is purely an oil play. So here was, where Oxy was right here. It got really contained with that 150 and 200-day moving average. But this is one to keep an eye on, because if it does break back above these areas, it could definitely move more. So that's what we were looking at here on Oxy, okay? Yeah, okay, here, Denise, yeah, use this link again, PowerCycle Trading /special. Okay, put that in, click on that, and then, use alert 20, let me spell that right, alert 20, and then, that'll give you let's see, the option to get that. Let me just double check let me see what that price was. I think it dropped it down to 522. Yeah, 552. So if you use that link, you're going to get this for $552. Now that's for 6 months of the alert, 6 months of the trading club. Start and stop whenever you want, so you're not, using up your time. And as you can see, if you do any of these trades, if you've done these trades, I mean, just one contract, you're pretty close to, paying off the service really fast. So a question is why not do it, I guess, is what I would say. And I think that it's as good or better than any other maybe service out there that you see. Let me know if there's one that you're like better. I'd sure like to know what my competition is. I don't really go around checking, so I don't know. So I don't really know. Okay, so here was Daniel. He got in on the Oxy trade. He got in at $76. So we originally set this up at, I had it at 73. That's where it was set up, and he got in at 76 on the Oxy trade. And sounds good. All right, so here's the Oxy trade when we originally set this up. Okay, so here, look at it, go through the details. So it went long, said long, the 20 June 44 call, short the 13, 45 and a half. Okay, at $73 or around. I say around because you might get it better, you might get a little worse. And so then this part of the trade went from, on the 13th. Now this trade spread now was up to 180 on the entry cost of 73, $170 profit, 146, but it was designed to, if it went the direction we wanted to, it was designed that we were going to turn this into a long call condor. So look at the potential we had for this trade. If it had worked the way we wanted it to, it was okay, but we still made an okay profit, but not the max. So we adjusted this in to that 20 June duration, long that 44 was what we were originally long, short the 47. So we've got that call debit spread we adjusted it to. We did that first, and then we added the credit spread, short the 48.51 call credit spread. All right, so now we had a call condor. Look at our risk. We adjusted it down to 37 by having that credit spread, big positive data. And so we had a spread of $300, okay? 47 less 44, 300, risk of 37, potential if it went out in here. Last week we would have made 263 or over 700% return. Okay, so if you do, so if you're not doing the trade because you're lacking the confidence, what I would really recommend to you is follow the trades, okay, but then what I would highly recommend is that if there's a specific, you go to my website and as a member, buy, let me show you, maybe you should buy the trades that we will do will be either counter diagonals or butterflies and condors. So what I would recommend that you do is you go here and use your members discount. You'll get this course for 60% off. Come down here, buy this course, spend some time, do your homework. It's not, you go to school, whatever profession you're in, do a little homework, right? And learn, and then come down here, buy the course. So you'll get this at a discount of 60% off, okay? So buy this course, it's yours forever. And then, what you're gonna be able to do is, have that confidence to do the trades, all right? So that's what I would really recommend that you do. So, you'll get this course for, $158, $155. I would get that course. And then the other one that I would highly recommend that you get is my course on the counter diagonals. right here. Right here. I would highly recommend that you also get this course. Okay, so it'll be the same cost basically, right? Use your members discount. Or the other way that you might want to go, this would be another option for you, is just the other one that I do is a combination of which option strategy to use when and how. And I'll be doing that here probably not before long here, but you could just do this course, which is a kind of collection of the main ones that I like to do. So here, this would be it right here. Yeah, I passed it up. This might be the way to go for you. The ultimate option guide. So this might be a really good one. This is one that is a combination of some of the key option strategies to use, debit spreads, etc., condors. So go through this one. This might be the one you might want, the ultimate option guide course. And so you'll get this at 60% off. All right, so I've got to, you just need to educate yourself and then you'll be more confident. Or the other thing you can do is if you just do your own thing, right? So, however you do trade, just, if you're just more confident buying the shares, just buy the shares. So on Oxy, you just, look at Oxy. I mean, you could have just bought the shares right here at 43.80 and then, sold them up here at 47. All right, or you might have just bought a call, at 43.80 and sold it here. So, whatever works for you, might be better to do it that way. I don't know. So those are some ways that you could start and then start studying as well. So that's the Oxy trade. That's where that went out. All right. So it went out, up 132 on Friday. On the 18th before the holiday, it was up, $168, 454% return. Now here's one where you can really make a lot of money. This is one that was ended up to be a home run. This is one that we did on the Russell 2000. We did a long put calendar diagonal on the 21st. It was trading at 207 and then adjusted this to a put debit spread on the same day when it was trading now down at 203. So it went from 207 to 203. So it really ripped to the downside and then took profit on the 22nd. Now it was at 201. So it went from, so here's a perfect example, if you want to just maybe just buy puts, right? So you could have just bought puts here at 207 and then it went down to a day later. Now it was trading at 202. All right, but here's the trade that we did. Originally we did the trade here as a new counter trend short. It was trading around 207. So we did and breaking below the 8 exponential. So target 1, 205. Target 2, 202.28. That was the gap fill. That's the reason I put that in. And so originally did this doing a long the 22 May, 207, 204. This is a really tight, real creative put counter diagonal at $1.25 and then adjusted this thing as it was going down. So here it went from now it was at 207, now it's at 203.75. And I said, if you're long this put counter diagonal, we're going to adjust it. So we're going to adjust the trade. So we're going to sell to close the 207 put for a profit. All right, we were long the 207 put, we sold that for a profit, and then we bought to close the short put, the 220 to 22 May 204 put, and we bought to open the 206 put. So I'll go through this and sold open the 200. So anyway, you can see I'll show you this in a minute, what we adjusted this to. So then on the 22nd, that counter trend short trade now was trading at, look here, 201.99. So, if you did this trade and want to do your own deal, you could have just bought puts. All right. So if you're long this adjusted trade, take some profit, hold balance. Currently, this was now up $264 per spread, 347% return. And then here it was on the 23rd. If you're long that put spread adjustment, take more profit, hold same balance for more downside, currently up around $340 per spread, 447% return. All right, so here's one that, you know, you could have paid for the whole service on this two contracts on this trade. So here's the short trade setup. Everything's the same. Everything's the same. When I look for trades, I'm looking for my momentum indicators, negative here, cycle reversal, breaking key support. So went short right there. It was trading right there at 207. So took some profit, adjusted it here, and then it was down here. This was a quick move down. All right, so this was just a really, really fast rip to the downside. So again, these are all trade alert service trades, okay? And then sold it. So here was the original trade. We had this as a put calendar diagonal and specifically designed to keep the trade costs really low, short duration, wanted to have a low at capital at risk, short duration. You see this was a 23 May 22. It's just a 2-day spread. This was for an extreme breakdown. That's why the trade was set up short duration. So originally set it this way, knowing that if we got to move down, then we're going to adjust this to a put Deva spread or put condor or butterfly. All right, so when you take my courses, I go through these adjustments, why they're done and how they're done. So then we adjusted this trade into this long put condor from that put counter diagonal. So now actually put Deva spread. So now we're long that 206 put. Remember, we sold the 207, took a big profit, adjusted it down to the 206 and shorted the 200 against it. So now we have a $6 wide spread. Our total risk now is $76. So potential to make $524 if it keeps going down below that short strike of 200. That would be over a 600% return. So that was specifically designed for that. So we didn't get that, but we had a pretty good profit. So went ahead and took that profit. It was trading right here. This thing had a big rip down, and now it was trading at the 23rd here. Now it was trading at $280. So originally it was set up when it was trading at what, 207. So now that spread blew from 76 to 434. So we're up $358. That's one contract, okay? 471% return. So here, if you did two, you paid for the service. So I want you to have a chance and see that, that money that you're paying $552, if you follow the trades, you're high probability you're going to get your money back pretty fast and start making money on that investment. And, it's an investment, okay? That's the way to look at it. Now, here are the butterfly condors. So these are trades that are very, very selective, but these are really high potential profit trades. When we do butterflies, literally we can make 25 to 1, and I'll show you some that we've done that on. So I started this alert service back in 2019, and we've had 228 trades closed out, 164 winners, 17 break even, 47 losers. So these are very, very low risk trades. We keep our risk super tight. So we're, a winning trade rate around 79%. Now these are going to give you the highest potential returns on your capital when we do butterflies and condors. So the average maybe loss might be 75 or less, but you can get, returns of 2 to 1 to 25 to 1. Literally, those are kind of possible returns. Of all the different option strategies and spreads, a butterfly will give you the highest return of any option spread. So here's one that we did on Palantir. This was a long call condor. So we did this as a straight call condor. And so Palantir was trading at, found this on the scanner. So it was trading on the 13th at 123. And so here was the trade sent out. Correction, I had something wrong. Correction, it said new Palantir long, trading at 123, daily cycle over retracement reversal off the 21. And it's testing the weekly high, okay? So testing the weekly high, meaning it could break out. High monthly open interest at the 16 May series at the 125 strike. So daily positive momentum and an upside momentum cross is another indicator that I use that I teach you, in the trade room or in the courses. Here's my target. I gave you target 1 and 2, 125 and 130. So I always give you 2 targets. Know your risk. Here's the trade. Buy 1 condor. So 1 means buy 1 or buy 1,000, whatever you want, but I do it as per contract. So this is buying the condor. So you're buying the 16 May. You're buying the 123, 125, and then it says 132, 134. So a condor is you're buying a call debit spread and then selling the 132, 134. That's a spread. That's how it's outlined. It's a spread. So that you're buying the 123, selling the 132. That's a call debit spread side of it. And then selling the 132, 134. Now, I send these out. I have to get these out fast. So it's hard to just write out to be totally descriptive. And then when I send out an update, then I have time, I'll put, I'll spell it out better. But when I'm trying to get these trades out, I have to get them out pretty fast, to try, so you can have get a good entry. So you have to understand, how to read it. So that's a great question to understand. So again, it says buy. So it's a spread, 123, 125, 132, 134. It's a spread. So you're buying that part, selling that part. Okay, so that's a condor. So once you understand, how to read it, then, it opens up for you. So I understand. So then that was the setup on that condor. And then, now I sent out another alert here on the 13th. Now it's trading at 129.50 based on the big move higher. It was up $9 if long, the 123, 125 call spread, and short the 132, 134. Now adjusting to adjust the spread to width out. So selling to close the 16 May 123, 125 because it was ripping up too fast to the upside. So had to adjust and said buy to close 132, 134. Buy to open the 125, 127. Anyway, let's go through it. I could be here most of the day kind of going through these, but this was the Palantir. Now it was traded on the 16th at 128.94. If long, that adjusted 16 May. Okay, so it ended up doing this adjustment because it was going up so much, had to move up the strike. So now we're long 125, 127, short the 136, 138. Okay, so it'd be like this. Okay, so we're long here, a condor, short this here. Okay, so we had to do that. I did that adjustment because it's running up so much. I'm doing that for you, telling you how to do it. And then here it was. We were long on the 13th right here, 123. Now on the 16th, it had ripped up here to 128.88. Could have just bought calls if you wanted to do that. And so here was the adjusted trade. So now I have the long, the 125 call, short the 127, and then short the 136, 138 right there. Now the reason we do this is we reduce our capital at risk and we increase our positive theta to positive theta, so we have no theta decay. So now we've got this trade adjusted to debit cost of $72, spread width 200, so potential make 128. 177% return. So we're just chipping away here. We're just buying and selling, looking for trades, and just keeping our risk low. So it went out right here. So went out up to $128, 177% return. Here was another one, IBM. I'll kind of go through these other ones kind of a little bit faster. So here's another one. So if you did IBM here ended up making 158 bucks. So I mean, you're these trades are all pretty much all making money, or they're very low. Sometimes we'll get out for very small profit or break even just to get out because things shift, or take a quick loss, small loss. But here we'll just go through this one fast. This was a short on IBM, and we started this with a long put condor. I'll just kind of go through this. And so here was the short trade right there. You can see it right there. So it was breaking down. We had our momentum was down. We were looking for this break. broke to the downside. So what we did, we set this up as a long put condor. Sometimes we might leg into it, and I'll tell you that in the alert. But so had this, we're long here, the 245, put short the 242.5. So this is a put debit spread. And we did all this at the same time, but sometimes you can leg it and then short the 235, 232.5. See that? Okay, so you're long this put debit spread side, short a bull put credit spread that creates the condor. See that? So you're short this 235, long the 232.5 below it, and you've got that's your profit zone. So the trade cost here 70 bucks. So potential make $180 if it goes out in here, 257% return. That's where these returns get really big. And so it went out pretty much right there. So it's up $228. That spread blue to less your cost, 158 bucks. And then here's one more. This was a big, huge winner. This was one we did we did this adjusted into a put condor. I'll just kind of go through this fast, but shorted it right here on that break. It was breaking the 200-day, very negative momentum, and adjusted this to a long put condor. So we were originally long to put debit spread and then added the put bull put credit spread to it to reduce our cost. So long this put debit spread initially right there. And then when it ripped down, we sold the 550, 547 bull put credit spread against it, reduce our cost down to 43 bucks. That's it, our total risk. And then it was a $3 wide spread, 560, 563, $3 cost of the trade, 43. Goes out in here, 257 bucks, 597% return. And it went out right there, $257, $257, 597% return. Now, these are really fun. These are very, very selective. These are the butterfly pins. Now, these are sent out, these are alert trades that I sent out. Now, we did a really cool one last week. We had we did it in the room. We did a Batman butterfly, but anyway, that was in the trade room. But anyway, here are some pretty cool trades that we did. These are part of the alert service. These are what we call our lotto trades, okay? And because they're super, super low risk, but have potential for big, high payoff. Yeah, Suzette, here's the link. Use this link here. And then here's your, you'll get access to the alert service for 6 months, Trading Club for 6 months. And then you'll get, everything that I showed you earlier. We'll go through it one more time. And any questions, let me know. And then, and if you follow the trades, that I think you'll have a pretty good payoff pretty fast. Okay. So here's one that we did. I'll just kind of flip through these. Here's one that we did on NVIDIA. This was a what we call a binary trade. It was trading at 115. And so we did this. It's called NVIDIA long binary monthly butterfly option pinning trade, okay? So NVIDIA was trading at 115. Trade set up for a potential monthly expiration pin at 122 for next Friday. Okay, I'm telling you exactly why I'm doing it, what we're seeing. So this was the 21 March, had heavy option open interest at the 21 March strike, at the 122 strike, had over 377,000 open interest calls and puts. So I said, buy one butterfly, NVIDIA. So buy a butterfly. So you're buying the 118, 122, selling the 122, 126. It's a butterfly. That's how the order goes out. Okay, so you're going to be long the 118, short the 122, short the 122, long the 126. That's a butterfly. That's how the order goes out. Okay, it says buy. So you're buying that spread, that butterfly. You're long the 118, You're long the 126 and you're short the 122 twice. You look at that as a debit spread and call debit spread, short the credit spread, etc. That's a butterfly. For 30 bucks, do it around 30 bucks. Some members got it cheaper. So the debit paid will be your risk. There's no adjustments or stops. It's a binary trade. It either wins or lose. So if you lose 30. If you win, you have a potential for a huge winner. Penning is when, question, what is penning? Penning is when you, at expiration, the whatever stock it is or ETF goes out at exact the strike. Okay, so for this one, we're looking for NVIDIA to maybe pin at $122 at expiration, which was going to be the next Friday. Okay, pin, that means it's going to expire, go out at that price. And so here it was on the 20th. Now it was trading up to trading around 118. And I said, if you're long this trade, make sure you take some profit, currently up around $85 a spread, 326% return, because the risk is 30. Now here it is going out. It says option penning trade. Now it's trading at 119.66, getting close to that strike, that 120 strike. We were looking at the 122. Didn't quite get there, but it was close, okay? So even with these butterflies, you don't have to get it there perfect. So it was up $131, 500% return because the risk was so low. So here's the trade going out. So we set it up here on this date. Here it was going out. We didn't quite make it to the 122, but this trade had potential. Here's the potential to make $374. So $4 wide spread, risk of 26. That's what we ended up getting in at. So the potential was, if it pinned up here, to make $374. That's over a 1,438% return. That's why these are so exciting. And you add that to your trade portfolio, boom. I don't even include these into the summary of trades. These are so binary. So you might get a couple that lose 26 or 30 bucks, but then you get the one or two that make that. It's huge, right? And they're a lot of fun, and you're not stressed out because they're super low risk. So anyway, it went out right there. It wasn't perfect, but it went out up 130 bucks on that risk of 26. So that's a 500% return. Now here's one that was really fantastic. This was a SPY put butterfly. All right. So this one was a huge home run. So we did this one on the 6th. It was trading at 573.80, and so we were looking for a move. Took a profit on the 10th. It was trading at 560. So it was up 417 per spread. This was up over 1,000%. All right, so watch this. So it says new SPY penning trade, trading around 573.80, binary put butterfly, set up by the 10 March. This is a put butterfly, 565, 560, 555. So you're going to have a put butterfly like that, all right? Your butterfly body is the 560. Do that, buy that around $40 or lower. The debit paid will be your risk. There will be no adjustments, stops, or use. It's binary. You either make it or you lose it. Now on the 10th, now it was trading at 567. It was in the money, starting to make money. Look to take profit today on any move lower to 560. Now here it was later in the day. Look here, now it's starting to really move, 561. Okay, so late in the day, it starts to make it move. If long, the 10 March put butterfly, make sure to take profit today and close trade out prior to today's close. Currently up $232 or 595% return. Okay, so I'm sending out, these are just a few. I might have sent out already another 10, but these are a few to highlight it. So here was the short trade setup. Here was where we were looking for the pin down to there. And then here was the potential of the trade. You can see the profile of the trade. So this was the butterfly, 565, 560, 560, 555. Put butterfly. All right, so look at this. Trade cost 39 bucks, 39 cents for that butterfly. Spread width, $5 wide, 500 less 39. If it went out right there, you would make 461. That's over 1,000% return, but it still has a big zone of profit. You don't have to get it there, but it has potential for that. And it went out. Now we're taking profit, we're not waiting for the, final last tick, but this thing did go out right there. This was beautiful. So it went from 39, now it's up to 456. So this was up $417. If you did one contract, that's a return of over 1,000%. Now we're getting out as it moves in here. So, but if you had one contract or 10 or whatever, it did go out right there. So that was a beautifully planned trade right there. And so question, how do you take profit on a butterfly? So what we tend to do is, if you would have multiple, if you had one contract, what you would do is wait for the day of expiration, okay? If you had one contract, and then you're just gonna focus, you have to focus on that day and look for it to move down, and then you just close out the whole trade prior to the close. Or you don't have to close out the whole trade. You could close out the whole butterfly. So for example, if you're long the butterfly at 39, then you put in an order to sell it. When that spread blew out to 455, you put an order in to sell the whole butterfly at 456 or something, or you might have to come off of it a little bit, or you could just do one leg. As long as you're not, if you're put debit spread side, you're okay with. You don't have to worry about that. But if you're close to that short strike on your credit spread side of the put, you just could close out just the credit spread side. You just close that side out, close that side out, and you'll leave that one open, and that will automatically just kind of automatically close itself out. So that's the way that you can do it. Now this was incredible. This was the most incredible one I've ever seen. Okay, this is one we did on Tesla. And this was just so amazing. So this was Tesla was trading at 189.35, and we were looking for a pin at 200, and so it pinned it perfect. So here it is. It says new Tesla long binary monthly butterfly option pinning trade. It was at that time 189.35 trade set for potential monthly expiration pin at 200 next Friday. So here it says buy one. Call butterfly at around $12, 12 bucks. So you're long the 197.5. Here's your body, 200, long the 202 and short the body at $12. There will be no adjustments or stops, binary. So you either make it or lose it. So you're in here, you'd lose 12 bucks, right? Now here it was going out at expiration. So now when we set the trade up, it was 189.35. Now look at it, it's trading at 200. It's up over 1,791% return. Here it was a little bit later. I said, wow, almost a perfect pin. It was trading, it was a perfect pin, 200. This was up $230, up 1,900% return. All right, if you were able to keep one contract into the close, that's where it was. So here was the trade was set up right here. Here was the butterfly structure. 197.5 call, short the 200, short the 200, buy the 202.5, $2.50 wide spread, cost of the trade 12 cents, $12. So pin here, $238, 1,000. But think about it, if it goes down anywhere in between here, you still have a huge return, right? And it went out perfect right there. So this went a perfect pin. Now, again, you may not have gotten it perfect, but it was close enough just to show you. 12 bucks to 250, the spread blew to 250, so you're out $238. That's one contract. That's over 1,983% return. So these are very selective trades that when I see it, I'll send these out. Some of them make these, some of them lose, but but if you lose, they're going to lose 15 bucks, 20 bucks, 25, something like that. Here's one more that we did. I'll just kind of go through this. This was GLD. This turned out really good. And it was trading at 225, 222.85. We were looking for a pin up to 230. Okay, so this was sent out, binary telling you exactly how to do it. So we set the trade up right here, looking for this push to 230. A lot of different things we were looking at there. So here's the trade setup. We did the butterfly, the 227.5, 230, 230, 233, $3 wide, $300 wide spread. Cost of the trade, 29 bucks, 29 cents, 29 bucks. Potential if it goes out here to make 271 on that risk of 29, 934% return. These are very short trades, duration trades. These you don't have to stay in these too long, but your risk is so low. So when you blend these in with your trading portfolio, you might hit the big one, which really, gives you a big, huge spike in your equity curve. So then this one went out, not perfect, but pretty close right here. It went out right there at 230.47. So it went from 29 bucks up to 232. So this was up $203, 700% return. So you add that to your portfolio. Every now and then you're going to get one of these to pay off, and you can get a really big spike on your equity curve. So again, if you'd like to, learn more on how to zero in on these very great trades and avoid having a precious time and capital energy trapped inside losing trades, I hope you'll sign up. I don't offer this out very often, so I hope you take advantage of it today. So the cost, the normal cost, if you did this for 6 months, based way I price it, would be $690. Today, with 20% off, you get this for $552. You get 6 months of the alerts, plus 6 months of my trading club. Let's go through everything you're going to get. And so here again is here's the link again for you, and then put in that alert 20. And take advantage of this while you can. I would highly recommend it, obviously. So if you've been looking for more help and guidance, then this is your trading package alert you can get. So you'll get 5 alerts that I send out for 6 months, 6 months to the trading club. So basically this comes out to like $3.06 per day. If you break it down like that, I mean, that is pretty cheap. So selective butterfly or long condors, you can see what we did. I showed you earlier, calendar counter diagonals, or maybe a monthly pinning trade, or breakout reversal credit spread. We did one of those, SPX, and we did another one earlier last week that turned out was a max profit if you stayed in it. And then earnings trades, we do those selected. Okay, so if you would like to take advantage of tapping into my 4 decades of this trading, my experience, my proprietary software, which I'm trying to cherry pick the very best trades for everybody here, and then match those up with these high probability option trades, please sign up today. So when I do the trade setups, I monitor all day. I'm not, I'm watching these trades. Okay, so I'll take a break in mid part of the day, but the way I typically manage them, I'll always come back for like the last hour and a half at least to watch, to make sure what they're doing. And I'll check in, I'm at my desk all day anyway, so I'm always checking the trades. And so if there's something that needs to be done, I send out a quick alert adjustment, and these are sent out by text, or if you need it by email, we can do that. So I'm constantly monitoring these things so you don't have to do it. So you'll get 6 months to the alerts. I did 5 different types that I send out, and then 6 months to the trading club. Now, let's go through what you're going to get with the trading club. I'll just zip over here. So again, this comes out to about $3.06 a day. So you're not going to have to then manually comb through thousands of charts. I'm going to be doing it all for you, okay? And that's what the alert service really provides you. And so I'll go through exactly what you're going to get here again in a minute, but just here's something that Dan had to say. He said, "You're very diligent, totally thorough with your analysis. That's the foundation for the success of your alerts." And here's a great example. He said, "I paid for my subscription with the first 4 trades I took with you when I was just learning how to trade options. Please feel free to share this with your other participants if you wish." And then Scott, Said it'll be the best investment that you'll ever make. Go with the Elite Service, great group of traders. So again, we've got, running a 79% win rate. Started this back in May of 2018 through Friday. Over 885 trades closed out, 636 winners, 62 break even, 187 losers, 79 win rate, unaudited. The directional indicators, you can add those to your cart. They're based on my Momentum proprietary trading model. And you can get these for, they're available. If you buy it, you can have it for either any of them, Thinkorswim, TradeStation, NinjaTrader, eSignal, and also for TradingView, some of it. Let me show you here. Try to get that link for you. It'll show you if it's kind of what we call an upsell. If you do want to buy it, you can. It's right here. Here it is. Okay. So if you do want my indicators are basically, without going through a full-blown course, which I just did, you're going to get with the indicator package, you'll get the squeeze indicator, which you're seeing right here. You'll get my momentum indicator, cycle 1 and 2, and you'll get those are the three main indicators, and the squeeze indicator and a momentum reversal indicator. So anyway, that's, if you do want that, that's available to you. Here it is as an upsell right down here. If you click here, and if you're familiar with my indicators, then it gives you a chance to buy them. So you just add them right here, add to your cart right there. If you want more information on that, you can go also to my website right here, and it will give you more detail on those indicators. But it's what I use in the trade room. It's what I use based on all the trades are based on these indicators, and these are my proprietary indicators that I set up. Okay, right here you can see PCD custom cycle directional indicators, available with Thinkorswim, TradeStation, eSignal, NinjaTrader, and I've got them for TradingView, wealth charts, but I can't give you a special price on those. They're kind of JV. So you can come down here, see all the detail here. And today I'm just giving you that extra special if you do want them. Brokers to use, there are a lot of different ones. You've got tastytrade, you've got Thinkorswim, you've got TradeStation. Just they all have their good pros and cons. You've got you've got a wide range of brokers you could select from. TradeStation's, Thinkorswim's great. Yeah, sure. You can purchase a scanner. Yeah, so the scanner right here. So if you're a member here, let me just show you here. Yeah, so somebody wants to buy the scanner. So yeah, come over here and go to scanner right here. You go up to my software. Let me show you. If you want to buy my scanner, so go over here to powercycletrading.com. Go here, trading software. Click on that. All right, then here's the volatility breakout scanner. So you can read about it, etc. here. Now, once you get your membership, then you're going to get a members code, which would then give you 60% discount. So then you're going to add to cart. You put your members code in here, right there where it says promo code, and then you're going to get the you're going to get this for the price of 6% off. So you're going to be able to buy this for the price of $158. Basically 158, you can get the scanner. So you just put your members code in here, it'll give you 60% off. Okay, so that's another really great benefit that you're going to get. That's for anything on my website, courses or software. Now, when I do send out a trade, just to tell you again, so a lot of members just do their own thing, right? They just want the trades, and they might just buy puts, buy calls, whatever. But I'm also always going to give you, you're going to get the entry level when I send it out. I'm going to give you profit targets. Typically, I'll give you 2 to 3. And this is based on what I call my price target mapping. I'll give you what option series to use. I'll give you the stop loss levels and guidelines. Now, once the trade's on though, I'm constantly monitoring. If I see something needs to be done, I'll send out a text telling you we're looking at this, maybe we adjust it, etc. Trades are listed in an archive for your review. All right. And then I do a setup video review that day after the close to kind of show you more detail about the trade while I did it. And then we're constantly monitoring these each and every day after the trade goes on and doing it, my daily video newsletter after the market. I'll update these trades typically every day in the video. Then you're going to get access with the trading club part of your membership. You're going to get access to the weekly Q&As, which are live and recorded every week for the next 6 months. Virtual trading room, you'll get access to every day during the week for the next 6 months, 9:30 to 10:30 Eastern AM. Discounts of 60%, everything on my website, okay? And Traders Educational Vault. So all that stuff is part of your membership. And that's all part of your membership. And that's pretty much everything. So again, the trading club, you get the virtual trading room access, 9:30 to 10:30 during the week, every week. I have the daily video newsletter I send out every day after the close. Video are archived. We do a Q&A every day, not every day, but every week, typically on a Tuesday, live and recorded, educational vault, etc. So, Mike said, I joined your last year after making a bad decision, trying other services. You have been the best at explaining and teaching various aspects of trading. Thanks a great deal for your expertise. And Vanette said, trading room experience daily, awesome. Can I get it anywhere else in real time? Nothing like it. So I appreciate those positive comments from the trading room. That really is beneficial for everybody to see that. And that's pretty much it. So again, hopefully you'll take advantage of this and go in there and go to powercycletrading.com/special. And I hope this today kind of clarified a lot of this and showed you some things that are coming up. And really appreciate everybody taking some of their time on Saturday to be here with me. Any questions right now? The daily market updates, if you're having any issues not getting things, just send us an email to support@powercycletrading.com. Okay, here it is. Just send us send whatever your issue you're having problems with. We'll get it all straightened out for you very fast. It's better, the phone number, no, it's better just send us an email. We're not just got one girl that helps me. She's Rachel. I've got actually 2 girls, but she'll get you taken care of. Just send it to support and Rachel will see it and she'll get you all fixed up. All right, so that's okay. Yeah, the credit spread. Yeah, so we'll see how it works out. The credit spreads I'm very selective on, and again did it because of the potential for this market maybe to be stay capped. As we head towards the deadline, and so we did another one about 2 weeks back that turned out for everybody that stayed with it. It was a max profit. But you can see here, we're just getting all these reversals. So the markets are starting to stall out. We've got negative momentum. So what we did was, this was going out about 1 standard deviation out of the money, and we sold the bear call credit spread 1 standard deviation out to give us that kind of theoretical probability of keeping that full credit. So this thing went up to about $1.20. So short this credit spread here. Let me pull this 1 second here. Pull it up, it's stuck here. Here we go. So we'll see. I think, like I said, I think the market, we could get it kind of somewhat capped until we get a better outcome. Now, next week, there's going to be just a lot of Powell will be talking. We've got the PCE number on Friday, but maybe we'll be out of this. So set this up for 115 bucks on a credit. Okay, so this is a short strike up here at 61.10, and that was about an 18 delta short strike. So this was a 61.10 right here. I'll show you. This was doing the 3 July. So we'll be out of this hopefully sooner than that. So when we set this up, was looking for a 20, like a, 1 standard deviation out of the money trade, and this was around an 18 delta. So get real high theoretical probability trade for it to be closed below 61.10. See, it's a 19 delta, 81% probability, but again, theoretical. So there's about a 80, let's see, 61.10, there's about a 81% probability that price will be below that level on expiration. But what I typically, like I said, in the trade, start, you take a profit when you get 70, 80% of the credit received. Just go ahead and probably typically take it off. These aren't, the big home run trades. These are just chipping away, taking advantage of what the market's given us. And so we'll see if that's the case. All right. Any other questions? And I'm going to look at that DuPont trade. It looks pretty interesting. Yeah, you can use SPY. You can use SPY. Definitely just use the same kind of strikes. It just kind of, if you were doing SPY, you'd be doing about the 6,100. You could definitely do SPY. If we were doing, if doing SPY, it'd be basically, it would relate to about selling the 610 short strike. See, that's a 17 delta, 610, 615. See, the SPX is just basically 10 times the size of the SPY. So if you did 10 contracts of SPY, see your credit's not as much, but that's what you'd be looking at. Plus, the SPX is cash settled, so there's no exercise threat, anything like that. All right, everybody, I just want to say thank you so much for being